In the world of trading and day trading, effective trend analysis is crucial for successful trading. One popular trend-following tool is the Supertrend indicator, renowned for its ability to identify market trends. However, there is actually an improved version of the indicator that takes trend analysis to the next level by combining moving averages and volatility in order to create an extremely powerful indicator. The indicator we are talking about is the Supertrended moving average, a powerful indicator that surpasses the old Supertrend by using additional moving average types such as the whole, EMA, SMA, and others. By combining these moving averages in the calculations, the indicator gets more flexibility to adapt to different market conditions. Along with this, the indicator uses a multiplied average true range, which causes for enhanced accuracy in trend identification as it adjusts to market volatility. Let's first add this indicator to the chart. Navigate to the Indicator Search tab and search for the Supertrended Moving Average indicator. Select the indicator made by this TradingView user and add it to the chart. Now let's take a look at the indicator input settings. The first setting we can see is for the source. We will keep this at its default value of close. Next, we can see that the moving average type can be changed. As you can see, by changing the moving average type to, for example, the TMA, we get a very different visualization of the trend. There are many moving average types to choose from. However, from our backtesting, we concluded that selecting the whole moving average causes for the most responsive supertrend. As you can see, after changing the moving average type to whole, the supertrend indeed becomes a lot more responsive. Moving on, we have the option to adjust the moving average length. Increasing the length of the moving average introduces a longer-term trend perspective. This means that the supertrend will be influenced by price movements over a broader time frame, resulting in smoother trend identification and potentially filtering out short-term fluctuations. Conversely, decreasing the length of the moving average emphasizes shorter-term trends, making the supertrend more sensitive to recent price changes. Since we are looking for a good middle ground, we will be changing the value to 150. The other settings that can be changed are for the ATR that is incorporated into the indicator and the time frame. We will be keeping all of these settings at default. Now click on the style settings of the indicator. Here we will be removing the white highlights that occur on trend changes. That was all that we needed to do. By applying the Supertrended moving average indicator to the chart, we can see how it enhances trend identification. The indicator visually represents the current trend with a dynamic cloud-like structure. When the cloud appears below the price action and is green, it signifies a bullish trend, suggesting buying pressure may push prices higher. Conversely, when the cloud appears above the price action and is red, it indicates that the trend has switched from bullish to bearish. When using the most basic method in order to read the indicator, it means that we would enter into a buy position here, due to the trend switching from bearish to bullish. However, the opposite is true here. Since the trend switched from bullish to bearish, it signals that we should enter into a sell position here. A different method of reading the indicator involves utilizing multiple time frames. Since the indicator has this option, let's add a second Supertrended moving averages indicator to the chart. Now head over to the Indicator Settings tab and click on the Inputs tab. We will be changing the moving average type to whole again. Once you have done that, make sure to also change the length of the moving average to 150. Finally, we will be changing the time frame on the indicator to a higher time frame. Now let's navigate to the style settings of the indicator. We will be removing the up and downtrend highlighter clouds. After that, we will be adding the outline of the Supertrended moving averages by increasing the opacity. As you can see, by combining these two different time frame indicators, it becomes possible for us to see both the longer and shorter term trends. This is because the line that is plotted represents the trend in the 4-hour time frame, meaning that it showcases the greater long-term trend that is playing out. On the other hand, the highlighted cloud that is plotted represents the trend in the 1-hour time frame, showing us the mid and short-term trends. Upon careful analysis, we can see a compelling scenario for entering into a buy position. The price action reveals a longer-term uptrend, as shown by the rising green line provided by the Supertrended moving averages indicator on the 4-hour time frame. This bullish trend signifies a sustained upward movement in the market. Along with this, we can see that the trend also switched to bullish on the current time frame. Because the trend is bullish on both time frames, it indicates that it's a good idea to enter into a buy position. To manage risk effectively, we will position our stop loss at the recent swing low, safeguarding our position against any potential adverse price movements. Additionally, to optimize our profit potential, we will set a take-profit level that offers an attractive 2.5 times risk-to-reward ratio. Now let's see how the trade plays out. We can see here that the price is in a longer-term downtrend, indicated by the red line, showing us that the trend is bearish on the 4-hour timeframe. We can also see that the trend also switched to bearish on the current timeframe. Because the trend is bearish on both timeframes, it indicates that it's a good idea to enter into a sell position. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a 2.5 times risk-to-reward ratio. Now let's see how the trade plays out. The final method of using the indicator is based on trend continuation. It can sometimes happen that while the price is in an uptrend, a small consolidation phase or a pullback occurs. If this is the case, you will first want to draw a basic trend line in order to see if the market structure has been broken. As you can see, in this case, the market structure hasn't been broken. Because of this, we will not enter into a sell position. Instead, we will wait to see how the price action plays out. As you can see, the market has now switched back to a bullish trend while still respecting the trend line. Because of this, we will enter into a buy position here. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2.5 times risk-to-reward ratio. Now let's see how the trade plays out. As you can see, there are many ways of reading the indicator. However, in order to create a full strategy whilst utilizing the indicator, it's important to add a few extra indicators to the chart. But before that, if you are looking for a crypto exchange where you can hold or day trade crypto, then check out Bybit. They currently have some of the lowest fees along with many trading possibilities such as spot, derivatives, NFT, and even options trading. Sign up via the link in the description to get up to a $30,000 sign-up bonus along with zero maker fees for the first 30 days. The first indicator we will be adding is the EMA. Navigate to the Indicator Search tab and search for the EMA indicator. Select the indicator made by TradingView and add it to the chart. The next indicator we will be adding to the chart is the Average Directional Index. Search for the ADX indicator, select the indicator made by TradingView, and add it to the chart. Now let's make some adjustments to the settings of the indicators in order to optimize them for the strategy. Let's first change the EMA indicator's settings. Navigate to the settings of the EMA indicator and click on the Inputs tab. In order to capture a longer-term trend, we will increase the length of the EMA to 200. By extending the calculation period, we can gain a broader perspective on the price movements. Additionally, for enhanced visibility of the EMA line, navigate to the Style tab and modify the color of the EMA line to yellow, making it easier to distinguish on the chart. If we head over to the Supertrend moving average indicator settings, you can see that we are still using the settings we previously input. Finally, for the Average Directional Index or ADX indicator, we won't be making any changes to its default settings. However, to improve clarity, we will plot a horizontal line at the value of 20 on the ADX chart. This reference line serves as a visual aid, making it more apparent when the ADX line has a value greater or smaller than 20. To enter into positions, by combining these indicators, we will be using the following method. First, we will be using the 200-period EMA to identify the long-term trend. Next, we will be checking the Supertrend moving averages indicator in order to determine the short or midterm trend and find the exact entry point. Finally, we will use the ADX indicator as a confirmation signal to confirm the strength of the trend. We will enter into the position based on if the trend is weak or strong. We are currently analyzing the US dollar to Canadian dollar pair on the 1-hour timeframe, focusing on understanding the market dynamics and potential trading opportunities. As you can see, the price was previously in a downtrend, indicated by the red Supertrend moving average indicator and by the EMA due to the price trading below it. This bearish trend was characterized by lower highs and lower lows. However, a shift in market sentiment occurred, leading to the emergence of a bullish trend. We can observe higher highs and higher lows in the price action, indicating an upward movement. Along with this, the Supertrend moving average also switched to green, signaling a short to midterm bullish trend. Moreover, the price crossed above the EMA, suggesting a transition to a longer-term bullish trend. Despite these positive indications, it's worth noting that the color of the supertrended moving average recently changed from green to red, hinting at a potential bearish reversal. Despite this, there is still uncertainty regarding whether a bearish reversal will start. When we draw a trend line on the price action, we observe that the price structure remains bullish. The trend line is currently acting as a support level since the price has not yet broken below it. This implies that buyers are still showing strength in the market. Given the lack of a clear signal, we will need to wait for new price action to develop and provide further insights. Upon further observation, we can see that the supertrended moving averages indicator is once again indicating a bullish signal. Additionally, the price continues to respect the trend line, reinforcing its role as a support line. Furthermore, when we examine the average directional index indicator, we note that its value is above 20, suggesting a strong trend and indicating a lack of consolidation in the market. Taking all these signals into consideration, it becomes evident that entering into a buy position appears favorable. Because of this, let's enter into a buy position here. To manage risk, we will set the stop-loss order at the recent swing low. For the take-profit level, we will aim for a 2 times risk-to-reward ratio. This means that we have the potential to gain twice as much as we risk losing. Now let's see how the trade plays out. Upon analysis, we can observe a previous uptrend that has recently experienced a shift in sentiment. Initially, the supertrended moving averages indicator and the exponential moving average depicted a bullish trend, with the price trading above both. However, a bearish trend has since emerged, characterized by lower highs and lower lows in the price action. The supertrended moving average has now switched to red, indicating a short-term bearish trend. Additionally, the price has crossed below the EMA, further confirming the shift in sentiment toward a bearish bias. After this bearish trend formed, we can see that the price made a pullback where it attempted to break above the moving average, causing for a temporary green background color. Despite this, the price didn't succeed in breaking above the moving average and instead headed back down in the bearish direction. It's also important to note, if we draw a trend line on the price action, it becomes clear that while making the pullback, the price also respected the bearish trend line, which acted as resistance. Finally, if we examine the average directional index indicator, we can see that its value remains above 20, indicating a strong and sustained trend. Considering these factors, it seems like a good idea to enter into a sell position here. By doing so, we can take advantage of the bearish market conditions. To manage risk effectively, we will place the stop-loss order above the recent swing high, aiming to protect our capital in case of a sudden bullish reversal. As for the take-profit level, we will target a 2 times risk-to-reward ratio, providing an opportunity for a favorable profit potential. Now let's take a look at how the trade plays out. The indicator also works well when combined with premium indicators such as the premium Lux Algo buy and sell indicator. As you can see, if we were to buy every time the supertrended moving averages indicator was bullish and a buy signal was provided, and sell every time the supertrended moving averages indicator was bearish and a sell signal was provided, we would have potentially captured profitable trading opportunities. If you are interested in getting access to the Lux Algo premium indicators, check out the link in the description to get them with a 30-day money-back guarantee. I hope you could see how powerful the supertrended moving averages indicator is when you combine it with other indicators. If you enjoyed the video, please leave a like and subscribe to the channel.